What's going on, everyone? Got the notes up. Sunday prep for the week of May 24th. So last week, both the SPY and the QQQ, they held key levels of support on the weekly charts. So the SPY held above the weekly 8 EMA, the Qs held above the weekly 21. That's positive as far as it moved back towards the upside goes. Or at the very least, it's positive as far as the weekly charts holding up. The trend is still very much alive. On the daily charts, the SPY looks a little bit cleaner than the QQQ. So for the SPY, there's a good-looking daily squeeze. There's no squeeze here for the Qs. So, a big focus will be on the S&P 500 and the sectors that have been leading the way as of late, industrials, transports, etc. But I do think the tech stocks could be making a comeback here, and potentially they could play along with the overall market should that squeeze fire to the upside for the SPY. So as far as daily structure, SPY looks better than the Qs, and if the SPY can hold support above the daily 21, I'm going to be looking for the daily squeeze to fire to the upside over the next 1 to 2 weeks, looking for a move into 2 or so plus ATR to the upside. So as far as those structures go, let's take a quick look at those there. And keep in mind, just because we have a squeeze in the SPY, the market's going to do what it wants to do. Doesn't mean the market has to go higher. All I like to focus on is probabilities. So make sure you remember where I'm coming from. But the old SPY here, so we held structure last week. The weekly chart is still very much intact. Stacked EMA'S, green 10x bars, and you held that weekly 8. So that's a good sign there for the weekly chart for the SPY. And in the Qs, the key level here this week was the weekly 21, which we did find some support at. So at least as of right now, the last few weeks of selling pressure here, it's looking pretty similar to back in February and March. We got a pretty good push, move back to the 21. You don't take off immediately, but you hold support, then you get the follow through. So both the weekly charts look good, but here's the difference to the daily charts. For the Qs, we didn't quite get the close above the 21 on Friday. No stacked EMAs, and there's no squeeze there. So it's a little bit sloppy, so to say, but the squeeze here for the SPY, I think, is awesome. Here we got the stacked EMAs. We're above the 21. So as long as we can hold support, what I'll be looking for over the next week to 2 weeks is that this daily squeeze releases to the upside, and we should be looking at the very least plus 2 ATR, so 42.50-ish. That's what I'm looking for. So if the SPY fires long, I think you get continuation in some of the sectors that have been leading as of late. Think of financial sector, think of the energy sector, there's the transports, the industrials. They've been showing signs of leadership as of late, so if the SPY continues its move forward out of the squeeze, I would think you get some follow through over here. What I'm going to focus on though, so with the SPY squeeze, I'm looking for a week or 2 weeks of momentum, right? And now the question is, where do I look to trade? Where do I look to get positioned to take advantage of that momentum? So if the SPY fires long, it's good for pretty much everything across the board, meaning you probably see financials keep making a move higher, but there's no daily squeeze here, so that's not something I can work with. Energy probably keeps going higher, but there's no daily squeeze here, so again, I can't work with that. I'm always looking for the squeeze. Even if the SPY has a squeeze, which means generally everything across the board has a pretty good chance of moving higher, I want to participate in that momentum with my go-to setup. So for the industrials, I like the daily squeeze here. That's got a good structure to it. And my 2 favorite setups within the industrials would be Caterpillar, beautiful daily squeeze, and then Triple M. This has a good structure as well. So my pick of the litter, no pun intended, was Caterpillar. So good looking squeeze, and let me show you what I'm working with here. Got June 11th expiration, 2 different sets of spreads. 242.5 by 237.5, and then 235 by 230. So I'm liking this chart here with the overall market in a squeeze, and then with the industrials in a squeeze, looking for CAT to fire along in its own squeeze for a move into 248-ish, pretty much plus 2 ATR, right back there to a new all-time high. So, again, like I said earlier, just because you have squeezes doesn't mean the market has to fire along. We're just thinking in terms of probabilities. So what I like so much about this Caterpillar trade, all on its own, this is a kind of structure I'm looking for if I'm looking for a stock that's got a good probability of making that 2 or so plus move higher, 2 or so ATRs. Now taking into consideration, we found a good looking setup here in a stock that's part of a sector that has that same structure. But there's already a pretty good chance here you get 2 or so ATR to the upside. Then you get the timing of the overall market in a squeeze, potentially looking to make its own 2 to 3 plus move higher. So that's that kind of stacking probabilities mindset. The individual stock looks really good. It's part of a sector that looks really good, and at the same moment in time, the overall market has got a pretty good looking squeeze. So I'm going to be focused on the industrials, not going to add to Caterpillar because I like the exposure I got there. But then on the side over here, with the tech stocks, that squeeze firing long for the SPY, it's certainly not bad for the Qs. So, that is one positive potentially if that squeeze does fire long. You could see technology play along, but my focus there is on that weekly chart. As long as that weekly chart can hold structure, I'm not going to throw in the towel here completely on tech yet, but as far as getting aggressive, I need a couple solid closes back above the 21. So this isn't the cleanest daily chart. There's no squeeze, no stacked moving averages, can't quite get the close above the mean. So what I'm looking for here, if the SPY holds structure and that daily squeeze begins to unfold to the upside, and then if the Qs can just get a couple solid days back above the 21, I think of the overall momentum in the market itself, you could see technology wake back up, looking for a move back towards the highs around, the Keltner channels are going to move, but call it 14,000. So I do think if we can hold structure, technology might get off its ass and participate. But again, with the mindset of, okay, if there's going to be momentum there, if everything kind of, falls together, how do I want to go about taking advantage of any potential momentum in technology? And it's all about a good-looking chart, high probability structure. So if you look at Amazon, if the S&P 500 fires that squeeze and goes to new highs and technology cleans up and it makes a move back towards the highs, obviously Amazon's going to move higher, but that's not a good-looking chart. Under the 21, no stack moving averages, no squeeze, so no trade for me on something like that. And then Microsoft, I think, looks the same. There's no stacked EMA'S. So if I'm going to be looking for tech here, I'm still looking for my go-to setup. In Facebook and Google, that's where you can find the structure. So I don't think you can go wrong with either of them. Good-looking squeeze, stacked moving averages. So for Facebook, I would be a fan of a 310 strike put credit spread. Sell the 310s, but my pick here is Google. So very much like back in March, April, good-looking squeeze, hold structure between +1 and -1, but it doesn't really get it going until the overall market gets it going. So it looks pretty similar right now, and we're pretty much waiting on the same thing here, the SPY and the Qs to get it moving. But as long as we hold structure between +1 and -1, I think this is a good-looking squeeze. Here you got the stacked EMAs, you're above the 21, you got the squeeze. So for Google, if the SPY can fire that squeeze to the upside, and if the Qs get into gear here, I do think you could see a move from Google, a good 2 or so ATR to the upside. So for Google, let's see, we got the June 18th expiration, 2290 by 2270 put credit spread. So that's a position there, and looking for a move and to call it 2400 if not higher. But whether it's the industrial sector with that beautiful squeeze, or a stock in the industrial sector like a Caterpillar with a beautiful squeeze, or if it's a Google or if it's a Facebook, they're all good looking charts, but at the end of the day, they're going to work if the market fires long, and they're not going to work if the market doesn't. So it's pretty much as simple as that. So with that being said, overall focus over the next 1 to 2 weeks is going to be on whether or not this daily squeeze fires to the upside. If it does, well, then I want to have a little bit of exposure in the industrials because they've been leading the way. And then because I do think technology could get it going here, let me look at the best structure within tech, which I think is a Google or a Facebook, and build a position there. So time shall tell, but it's going to be an interesting week. So I appreciate you tuning in. As always, enjoy your weekend, rest up, and I'll be seeing you this week. Take care.